What is going on, guys and girls? It's the Short Bear, and today we're going to talk about RKDA. I told you in chat I would make a video about it, and that's what I'm doing right now. It seems like a lot of people got caught on this one, but there were some major tellers about the stock itself and the potential for it to really start ripping. Um, First of all, we are in the summer, which means there is not much action. The capital flows out of the market. We don't have as many hedge funds and investors and so on in the market, so that's why we don't see a lot of movement because volume needs capital behind it, and we just don't have it in the summer. At least most of the time, we don't. And that's exactly why a lot is fading during the summer months. All right, we don't have a lot of runners, and that's exactly what makes the summer so damn hard to trade. It's not only that you don't have much plays; it's also once you get too acquainted with trading on the short side and just taking those moves and everything fades, the one play that rips, you're just not really prepared for it, and you better bet that most people, 99% of traders out there, will be caught by surprise, and that's when those major squeezes happen. So it's been right around a week to 2 weeks where I thought we are getting into this era where everyone is on the same side. So there's usually a pattern that repeats over and over again, where everyone is starting out, let's say, short. Everyone is short bias, everything is fading, and so on and so on. And then we get that one play where it just rips out of nowhere. It rips up like, let's say, 400% or something. Just a major squeezer. And from that point on, every single short is either kind of gone out, so they don't have any account anymore, or they've taken a big loss and they're thinking, well, it's not working anymore, all right? Shorting doesn't work anymore, and then we get other plays that start running because of that first runner. So everyone's kind of searching for the next runner. It runs, until kind of everyone is long bias, so everything is kind of ripping, and then usually we get those really bad companies that put out a PR, it runs, it pops at the open, and everyone is long bias, and they get bagged, where we get that 50% fade, and then the next fade, the next fade, the next day, the next fade, and everyone shifts back to being short bias, and the circle kind of repeats and repeats and repeats. So then everyone is short bias, and then we get, after a few months or a few weeks, we get the next ripper and everyone shifts back. And I really like that period where something pops, because that means that volume will come in the market most likely, and everyone's kind of is going to start longing a bit more, and that's when we get the biggest fade. So the best phase happen when everyone is long bias and they get all back and all sell, and locates are restricted or just really hard to borrow. So this is the chart for RKDA. As you can see, I didn't short at the open. I went long on the first dip under $3, thinking we might reclaim $3. As you can see, we even did, but we broke under it, so I cut it right away. All right, so as you can see, this is pretty much nothing. It's maybe 5 to 10 cents or something, really nothing. And then I started longing again on the dip, because the thing is, I thought if we broke under it, we would see a lot of panic, but we didn't see any panic. So we broke under it, but we supported. So long here, then we got back, we cracked the lows again, but we reclaimed right away on somewhat volume. So dumping volume, basically where panic should set in. No panic whatsoever, reclaim. Kind of green candle, but like small ones. That's where shorts kind of tend to get in for the bounce and for the fade back, and then just skip up. Absolute absolutely rips. Everyone's panicking, and we get that major short squeeze. Started covering some into the first pop, thinking maybe we get some kind of reject, and then later on a big rip. So I thought I could unload half here and maybe buy some more after consolidation. Or either I load up again and I sell all the higher, or basically break even on whatsoever or whatever if it doesn't work out. But as you can see, we got a next rip, didn't get to my order, which was at 478 at the start, but I moved it right away as I saw the bigger pullback. And yeah, got filled nearly at the high of the day at that time. I had 444, the high was 445, which was really nice to see. And after that, saw stuffing action right here. So once, twice, three times, seeing also some volume divergence. And yeah, took it short here, 430, covered at 407, I believe, half, and then the rest at 489. So everything, really, the risk is tight. I'm not losing much if I'm losing, and I'm just protecting my account. That's what I'm doing the whole day. So I'm going to show you exactly what I saw on every single thing, every single aspect that made this one into a long for me. And you know I don't long often, all right? You barely see me long anything. And as I told you, when I'm longing, I'm not longing breakouts and so on. I'm longing when everyone's on the same side short. Same thing, I'm shorting when everyone's on the same side long. And that's what really separates you, all right? It's when you're not trading with the crowd, but against the crowd. So let me show you everything. So first of all, let's check the stats. RKDA has a 33% insider ownership and 6% institutional ownership, which, I mean, the 33% is maybe a bit too much, so I'd like it to be under 30, but it's nothing big, you know, it's pretty acceptable, pretty happy about that, and 6% IO, that's pretty low, I'm really happy about that. The short percentage of the float is only 2%, that's really nice too, for short everything, right? So that's pretty good for short. For short, the best thing would be 70% institutional or something, that's when they really rip it, and the short percentage as high as possible. Not too high, because those with like 70% and so on, they have other players in it, so I don't like to see that. And the float is 3.5 million. That's pretty low, alright? It's not like 1 million or something, but it's 3 million. It's pretty low. It's not the lowest one, but it's definitely low. It's not big. From that point on, I'm thinking, all right, pretty standard float, pretty low insider ownership, pretty low short percentage of the float. That looks pretty good for short. So let me look further. The news. Vertica is the ticker, I believe. So they received the approval for soybeans. They have some kind of soybeans that are tolerant to something, drought tolerant, as you can see here. And it's basically yeah, the approval for it. All right, so it's not recycled. Then that's the first thing. So that's pretty good for long. All right, it's not recycled. Recycling would mean that they put out a PR in the past and they're just reusing it and rephrasing everything. So in this case, it's not like that. So that's pretty good for long. And but at the same time, it's nothing huge, all right? It's not something like a merger, acquisition, some kind of billion deal, some kind of Amazon news or something like that. Something like that, so it's nothing particular. So based on the news, I'm pretty much 50-50, all right? I'm not thinking it's a long, I'm not thinking it's a short. I'm just acknowledging that they have news and it's not recycled. Now let's go into the fundamentals. The fundamentals is really the main point, all right? That's the main point. That's why I thought it would be long, combined with the market sentiment and how the market is setting up as a whole as of lately. So we're going to take the most recent 10Q and we're going to First of all, look at the financials, 10 million cash. All right, we're not gonna do every single thing like we do, but we're gonna go cash, and then we're gonna look for the cash flow statements, which are right here. They have a cash burn of right around 1.3 million, which tells me they have right around 8 months of cash left as of March or as of the beginning of April, which means they have right around 6 million cash left. That's not much, all right? That's not much. So at this point, I'm thinking, all right, can they dilute something because they don't have a lot of cash? So I'm looking at ATM, no hit. I'm looking at sales agreement, which is basically looking for the same thing. I'm not seeing anything. I'm looking maybe at other forms, how they could basically write it at the market or at the market. As you can see, I'm not getting any hits. And that's pretty common, all right? ATMs are not as common as, let's say, warrants or something. Then I'm looking at warrants, all right? And I'm looking at some kind of table, all right? I read through everything on that day, which I can do pretty fast. But I'm looking at some kind of table or something, and I'm looking at what can they actually use, all right? Because as you can see here, let's see if I can find it somewhere here. Start warrants for the world. I'm looking at the exercise price for all of these, all right? I'm seeing $18 right here. I'm seeing $330 per share. I'm seeing 363 here. I'm looking at 10.72. I'm looking at 9.9. But as you can see, like I'm not seeing any kind of warrants that can be used, like $45 here, $10 again. And let's say if they even have some kind of table, because that would be easier to see. I think we passed it. Yeah, 2.8 million, and the 2.8 million were those at $9, I believe. So as you can see, we're not finding any kind of warrants, all right? We don't have any kind of warrants in the price range we're trading at, and even if we only have 2.8 million, all right, usually the 2.8 million is not, it's okay, but it's not a huge amount. If the conversion price would be, however, under the price we're trading at, I would have had a completely other opinion about this stock. But as you can see, every single warrant is over $9. So at this point, I'm thinking, all right, let me check out the convertibles. Nothing. All right, nothing convertible. So at this point, I don't have any kind of ATM. I don't have any warrants. I don't have, or at least I have warrants, but not at the price range I'm trading at. And we have other things. So first of all, this is not enough. All right. If you're looking at the 10Q that ended on this date or that was updated, you need to check if something came out after. And as a matter of fact, yes, we have a 424B5 that came out after. But same thing again. I'm looking at the offering price, and we are at $4.91. Where were we trading at? We opened at $3. All right. The next warrants are all the way up here, so at $4.90. What was the high of day on RKDA? I believe it was 490-ish, all right? Not even about 4. So as you can see, it plays a huge role. So still, we don't have any kind of warrants in the price range we're trading at. So everything is higher than that. So next step, I'm thinking, all right, maybe they need to pay back something or something is going on. And indeed, let me check out if I can even find it. Otherwise, I'm just going to tell you like that. Here, 8K from May. What is going on? So they got a notice of delisting, so failure to satisfy the listing rules On May 20th, 2019, the company received a letter from the Nasdaq saying that they did not maintain the value of 35 million. All right, they have 30 days to get that problem solved. Is it or maybe 180 days? Let's see here. Yeah, so they have 120 days to do so, and the alternative is for the company to regain a compliance with the rule if the company meets the 2.5 million stockholder equity requirement. So yes, they do have to get some cash to solve that problem. Otherwise, they're going to get delisted. So at this point, I'm thinking, all right, how much can they raise? I'm not going to show you everything so how I did it here. It would take a bit more time. But basically, what we're looking at is how much did they raise during the last 12 months, or how much did they dump of an ATM. So there are two things. They don't have any ATM, so we got that out of the way, and now we're thinking, all right, how much did they raise in 2019 and how much can they raise? So that's the whole thing with the baby shelf that we talked about in the past. All right, they can't raise more than basically um, ordered by the baby shelf. Right, so to do so, we're taking the float, we're multiplying that by the highest closing price in the last 60 days. If it's over 75 million, we're good. They can raise as much as they can, but if it's under 75 million, they can only raise 1/3 of the amount they ended up with. So let's say float times the highest price in the last 60 consecutive days would be 60 million or something. It's under 75, so they can only raise 1/3 of that, which would be 20 million. And in this case, RKDA can only raise 2 million, which doesn't solve the 2.5 million equity requirement, which means they need more and they need a higher closing price or something like that. So I got that idea that maybe they need a higher closing price, or most likely they want a higher closing price. Or they want to get to the warrants. I'm not seeing any reason for them to gap it up that much and to just let it go. The warrants are at 490, so maybe 490, or they're looking for a $7 to $8 close to really raise more. And at the same time, I told you just at the start of this video about the whole cycle, all right? So everyone's short bias, everyone's long bias, and so on and so on. And in this case, we were at that point where every single stock faded in the past. We were due for some kind of trap. And what I was looking for is some kind of trap like MNLT did. MNLT, just before MNLT, we had the same market where everything faded and we got that one huge ripper. So what I did is, same thing as always, you know me, data. I'm looking at the past to kind of get an idea of what could happen. So in this case, I'm looking at my stats. So that's another thing I did. I looked at the daily chart. I got my gap stats indicator, and I'm seeing over the last 5 years, we gapped up 9 times. 7 times out of those 9 times, we failed, all right? So 80% of the time, we closed red. But the other thing I saw is the average spike from the open is 33%, all right? That's the average spike, 33%. So I'm thinking this one can really run if it wants to, all right? 33% out of $3, that's 70 cents from the open. The close from the open when we close over the open is 99%. 99%, that's double the price on average when it closes over the open. Now, the average close from the open when it closes below the open, so if it closes red, is only 11%. So as you can see, we start to see a picture here. So 99% is the move on average from the open if it closes over, and only minus 11%, so an 11% fade for the times it closes below the open. So at this time, I'm thinking everything is going against the stock. We are at the end of the cycle. We have a stock that likes to run a lot, all right? So the closes red is pretty bad because it's 80%, so most of the time it will fail. But I'm seeing an average spike from the open that of 33%. So even if I get a spike and I'm long, I can exit there if it doesn't work, if it wants to fade, all right? But like the average fade is 11%. So I'm thinking if the average fade is 11%, I just need to get a dip of right around 10%, and then a spike. So I'm looking at the stocks that did the same kind of move. I'm seeing MNLT back then running pre-market, and then gives a pop, fades, gives another pop, breaks under the lows, and kind of can't really break down. All right, can't really break down, no panic, and then few candles where shorts get in, and then massive rip. All right, so that's what I'm thinking about. I'm thinking about AXGT, same thing, kind of pre-market, gives a pop at the open, fade, gives the first pop. All right, so this one, the whole thing. And then fades back towards the lows, crashes, but can't really make it under, and then crashes under, but no panic after that, and then they rip it. And I'm thinking, all right, that's exactly what I'm going to do. So then everything comes together. Same thing as on the other videos. What I do is I analyze everything. The news, the fundamentals, the technicals, the volume, and I put it all into a picture, into a thesis, which is my attack plan. And from there on, I'm just focusing on a plan, focusing on the process, focusing on doing the best I can to mitigate the risk and to get the best risk reward. This trade, the risk reward was basically 10 to 1 to 15 to 1. So I'm entering on the first dip, thinking, all right, we might reclaim right away. It doesn't work out right away. We fail. I entered again, few candles, and then exactly what I wanted to see, big pop, and yeah, that's it. And from the past, you can see that. So you could see if I pull it up that MNLT, RKDA likes to fade towards the end of the day. So that's what I was looking for towards the end of the day. But before that, it likes to rip. So as you can see, we open at 320-ish and dip down to 280, which is right around a 15% fade, I think, if my math is right. 15% against 11% on average in the past, and then from the open, from 320, 33% would be to right around $4 for 20, I believe, which is exactly the top. So as you can see, the history repeats. You have to have every single tool, look at everything, and then build your thesis. You can't just look at a stock, it's gapping up, and then you're thinking, all right, just let me short it, just because everything is fading, something. So keep your process, even if everything fades, just keep on looking, keep on looking, keep on looking, because one trade of these where you don't respect your rules, you're in full size from this area, and rips $1, that could really hurt the account. So keep it in mind, always look at everything. And yeah, that's going to be it. If you have any questions, please don't hesitate in chat. Reach out, even in the comments, subscribe, and I'll see you in the next one.